Hello, everyone, and welcome to the Venture Fuel Visionaries podcast. I'm your host, Fred Schonberg. I'm thrilled to welcome today Mike Jackson. Mike is the managing partner of Earthshot Ventures, which invests in entrepreneurs making a dent in climate change. Collectively, their team has invested in over 200 startups over the past 14 years. Mike started off as an intern at the Wesley Group, which is a Silicon Valley-based VC firm in the clean energy sector with over 400 million under management. And he worked his way up to partner in under 5 years with the firm. His investments there collectively have raised over $1.1 billion in follow-on funding from companies like Sequoia, Benchmark, BlackRock, Microsoft, Google, and Patagonia. He's also coached over 75 startups and investors through capital strategy and execution, including Elemental and Generate Capital. So join us today. We're going to explore his insights on climate tech and the future of sustainable entrepreneurship. So Mike, welcome to the show, sir.
Thank you. Happy to be here.
So can you share a little bit of your journey from starting off as the intern, like I talked about, all the way to what you're doing today?
Sure. Yeah. So I did my undergrad and master's at Stanford, studied clean energy, kind of realized that climate change was both a huge problem and B, a huge opportunity. And when I got out of school, I ended up starting up a company in the space, in the carbon offset market, kind of the way too early days of this market about 20 years ago. And ran that company for a couple of years, and then ended up meeting the folks at the Wesley Group who were raising their first fund, and realized that being on the investing side was really interesting to me and probably a better fit for my skill set. So I joined them as an intern. A couple of months later, got a full-time job, and ended up staying there for 9 years, investing across 2 full fund cycles. The first fund was far more kind of capital intensive, heavy industry, clean tech investments. The second one, far more software oriented, kind of business model innovations in the ecosystem. And made my way up at the firm, kind of had every job. I've kind of done everything in venture as a result. Got to work with awesome folks, got to work with incredible entrepreneurs, and a really tremendous experience. I then left there and joined a place called Generate Capital, which is a project financier in the space, so kind of the big scalable funding for companies in this ecosystem. Learned all about how that type of money works, and then went to a place called Elemental Accelerator, which is probably the largest accelerator in this market, where I worked with a bunch of their CEOs as they went through fundraisers and just kind of guided them through that process. And then through that relationship with Elemental, we decided to create Earthshot Ventures. So we raised the fund in 2021. It's a $95 million fund, investing in early stage companies across the ecosystem, brought in incredible investors into the fund, built out our team, and have now invested in 23 companies to date. So that's the quick whirlwind.
I love it. So what about Earthshot is different from other venture capital firms that are in sort of the climate tech space?
Sure. So I think a first piece is, we really think about ourselves as a financial first investor. I think there can sometimes be a perception in this space that this is concessionary funding, that we're really purely focused on impact. We get to continue to do this job if we make money, support incredible entrepreneurs who build huge businesses. And so that's our really key priority. The second is our team has just seen a lot. We've been investing in this space. My colleague Dawn and I, both for 15 years, invested in over 200 companies. And we really have this ethos that we try to put founders at the center of our work. It's about them, not about us. They're going to be the ones that create these incredible companies, and it's our job to support them on the way, bring that experience, bring in a network alongside them, and sometimes have the humility to get out of their way. And then I think lastly, we've spent a tremendous amount of time in just trying to figure out how do we meet these incredible entrepreneurs? How do we meet them really early? We've invested a tremendous amount in data to try to find incredible entrepreneurs. We've invested a lot of time and effort in building up a network for those entrepreneurs to find their ways to us. But kind of leaning in all of those different directions, goal is to find those wonderful folks and support them on their way.
I love it. How are you finding or maybe identifying the startups in this space that are truly disruptive, right? Like this is a space that, as you know better than anybody through your experience, a lot of money has gone into at different times and different sort of waves of investment. And it feels like now feels more real than speculative, not that it was before, but I'm curious how you're kind of making sense of everything that's out there. I mean, when we talk to corporate partners, this is the number one thing that pops up. We need to be more sustainable. We've made all these promises for 2030 goals and whatnot. and we've got to figure it out, and it's not what we do on a daily basis. So it feels like there's a lot of momentum here, but curious how you're sort of separating the wheat from the chaff.
Yeah, absolutely. So it's been interesting to have the broad experience, both in terms of time in the space as well as stage. So I've worked everywhere from kind of pre-seed companies, person with an idea, through companies going public in the ecosystem, and so I've really seen a tremendous amount. I think a first piece, and then like a really key learning from my time starting at the Western Group and going on into other areas, is really to think about business models and playbooks that work. I think some folks tend to approach this ecosystem saying, what are the problems we need to solve? If we're going to address climate change, what do we need to solve? And I think that's really important, but it's really only part of a Venn diagram, because there's a lot of problems that need to be solved that probably aren't going to be a tremendous fit for this very specific type of money, which is venture capital. And so we tend to look for what are those playbooks that have produced these big outcomes in other industries, and where can we see those transitioning into climate? So an obvious example of that is certainly going to be in the kind of traditional tech space in VC. So looking for models like marketplaces, which have historically produced many of the biggest companies in the world, many of the biggest outcomes across the tech ecosystem. Where we see marketplaces enter businesses in climate, we get particularly excited. B2B SaaS, business-to-business software as a service businesses, are another highly replicable playbook that have produced billion-dollar companies in hundreds of different industries. We're going to see the same thing happen in climate, so we look for those opportunities. At the same time, then, we look for analogies outside of generalist tech. We've seen a number of analogies, for example, from the oil and gas ecosystem, and try to say, where does money flow, where do profits accrue in the oil and gas ecosystem, and can we see analogies of that in the climate market? An example there, in the oil and gas space, most of the money and profits flow upstream. It's who owns the resources tends to be where most of the profits exist. They tend not to accrue at a utility. They tend not to accrue at gas stations. It's really who owns these resources. And so we think something similar is probably likely to happen in the battery market. So as we looked at that market, we made an investment in a company called Cobalt Metals, which is using AI to identify where the precious metals of this energy transition are likely located underground. And then they own those resources. And we think that's where a lot of value is going to accrue. So trying to learn a lot, both from within our own ecosystem of what works, within the tech ecosystem of what works, and the energy system broadly, and try to kind of lean on those and use those to predict how the world might unfold. I think the second then is just really to think about it in the context of what can go right. Venture capital is kind of one of these industries where, we're going to place a lot of bets. A lot of these companies are going to end up, unfortunately, not being ultimately successful, at least as a financial return. And so you really want to think about who are those couple of companies a year that are going to drive tremendous outcomes in the ecosystem, and really think about and have that high bar for how awesome this thing can be. And so when we find those companies where we see that playbook in place, we see that opportunity exist, we see an incredible team kind of coming together around it, that's where we get pretty excited. What we tend not to then do is look at it purely from the lens of, we see this one little opportunity, let's find all the companies that are pursuing it. We try to think about it a little bit more in, let's find the best entrepreneurs, let's find those models that work. We got to scramble a little bit to figure out, okay, exactly what do they do, what does the competitive landscape look like, et cetera. But it's maybe a slightly different approach to how we think about investments, and one that we've seen bear some fruit so far.
Very interesting. So I have a question sort of on the power law play, right? There's one or two investments that will carry the fund kind of, and that math, right? That's, to anybody not in VC, is a very disarming reality. I'm curious how you think about that. Is it as much of just like that's the game, right? Like if you think of a baseball player, right? They go 3 for 10 and they're in the Hall of Fame. Is that how you're thinking about it? And how do you keep going because usually you find out about your losses before you find out about your wins. So talk to me a little bit about the psychology of a VC approaching it that way.
Yeah, it's a great point. So I was fortunate to have kind of seen firsthand a power law company in the first wave of clean tech, which is Tesla. So the Weston Group is an investor in Tesla. Saw them go public a few years after I joined the firm, and obviously we've all seen where it's gone since that time. And so an incredible company, driven the overwhelming majority of the returns from that first wave of clean tech investing. I think it's a really important point. I think it's important to really focus on it. We tend to think about it, especially in the context of sourcing and trying to find the best opportunities. So we have this kind of joke internally that from great options come great decisions. And so if we are seeing the best companies in this ecosystem, then we're at least considering those best opportunities. Our due diligence process will hopefully say yes to some of the right ones. We can join the board and try to be supportive. But if we don't start with, if you aren't talking to those 5 companies a year that are going to drive the overwhelming amount of the returns, nothing else you do really matters. If you're really great at evaluating companies, but you're not looking at one of those 5, you're not going to produce a fantastic return as an investor. If you're an incredibly shrewd and helpful board member, but you're not working with great entrepreneurs, it's probably not going to end well. And so for us, it's really this obsession with how do we talk to those folks. And so that's where we spend so much of our time as a firm, especially in a first fund. We can kind of build up a lot of those capacities over time. So for us, that has been having a really close partnership with Elemental, the largest accelerator in this ecosystem, where several hundred companies apply to them every year, a huge alumni network of CEOs in it. I mentioned we spend a tremendous amount of time on data and surfacing who we think might be interesting companies and proactively reaching out to them. We've leaned heavily into building an executive in residence program where we have these interesting folks who are making the tech to climate transition, spend some time with our firm, look at those opportunities alongside us, source opportunities through their network. And we're soon to launch a scout fund, which is another concept, kind of a playbook from the generalist tech ecosystem, where you actually find really interesting folks in the market, and you give them a small checkbook and say, who would you invest in? When your head of product is leaving the company to go start a new business, give them a small check on the way out the door. When your business school classmate's starting a new company, we'd like you to be able to say yes. And so that gives us both that greater degree of exposure, and it also invites some kind of contrarian thinking in it, because I might not say yes to all of those opportunities. But if we can enable and empower really smart folks to say yes, some of this market is also just recognizing that some of the most transformative companies look a little weird, especially at the early stages.
Always,
and just over time, they start to look more and more. It becomes more self-evident that they're interesting. When you look at the Ubers and the Airbnbs of the world, they had the glaring flaw initially of being illegal, but they also had this incredible value proposition. And it was that what can go right here, that incredible value proposition that really won the day as to whether those were good investments. So really trying to invite that sort of thinking into how we look at companies.
Well, I think would also could help I'll offer this for free, is if I say that doesn't make any sense, it won't work, it usually does very well. Because both Airbnb and Uber, I was like, that doesn't make any sense, that won't work. Yeah. And looking back on it, they both solved a pretty big deal.
They did all right.
That's very interesting. I love the idea of the Scout network, and so essentially, in case anybody listening doesn't understand that concept, is the idea that there's somebody and you say, hey, here's you can invest up to, we'll make up a number, $10,000, right, or $100,000, and that essentially will be like the firm's investing in that company, but you're going to get some carry as part of it, right? Is that sort of the concept?
Yep, that's the right way to look at it. And so that gives us a broader portfolio of really early stage investments. It allows us to scale down to the very earliest stages. Yeah. And then those become follow-on investment opportunities for us. What's also interesting is it then provides this kind of ecosystem around the firm. So a lot of building a great firm is just building this constellation of smart folks around the firm who may, so if we bring in a scout who's, say, the CEO of a Series C company in the ecosystem, that might be the next GP at Earthshot. That might be somebody who's going to start another company in 4 years. And because we've built that relationship with them, we become their first call. They may be a diligence resource for us. They may refer us to a later stage opportunity that comes across their plate, where it's a company in their market that's solving a really key problem, and they just simply let us know about it. And so keeping really smart people within your orbit is, I think, a really key strategy in building a successful venture capital firm.
Yeah, I think it's so smart. Let me ask you this: what challenges do you see your founders facing currently in the world we're living in? Knowing that every founder's journey and challenges are slightly different, but are there any sort of generalities that you see clean tech founders facing right now?
Yeah, there's certainly a few. So lots of ink has been spilled around the questions of kind of the longer time horizons in this market, the capital intensity in this market. That certainly refers to a subset of this ecosystem. And there's a lot of software companies in the space where that doesn't really apply. And I think it's really important for folks to understand those distinctions. But that can be a challenge for a lot of companies. And a lot of the problems that we need to solve to address climate change are going to involve big physical infrastructure. It is going to involve long time horizons. So when we look at it from an investment perspective, we try to understand, okay, where are those opportunities that do take that little bit of time, but they can be enormous. They can be the Teslas of the world that drive that huge return. That's probably a subset of that piece. And then other types of money are really important to coming in. That's why I think my experience at Generate was so eye-opening for me, was just to see this different type of money that just works totally differently, is not making power law investments, is looking to say, how can we minimize risk? And at the same time, when you can minimize risk and create a lower risk, lower return investment, one of the kind of key things that blows people's mind, especially in Silicon Valley, is that's where all the money is. The vast majority of the money is in low risk, low return investments. And venture capital is this tiny little piece of the capital stack. And so for when companies can de-risk what they're doing, they can access much, much more money, which is really an important piece. Certainly another key challenge that they face is, not all the externalities have been internalized across this market. You're still allowed to pollute. You're still allowed to emit carbon dioxide. That hasn't changed to a large extent in the US. It's starting to change in Europe and other places. Obviously, some things have changed here as well through the IRA and others. But that remains a challenge. Apathy remains a challenge. In some customer segments, people, this is a problem, but it's not my biggest problem. I can put this off. So we really look for companies that are able to create that urgency in their customer segment and not totally rely on folks saying, I'm going to do this because it's the right thing, but I'm going to do this because it saves me money, saves me time. It creates these other benefits associated with what they're doing. And then it's our job to kind of work with these folks and help them navigate through it, help them bring that experience of, here's somebody who solved this problem before. Have you thought about it in this way? And can they surround themselves with awesome folks who can kind of guide them along their path?
Yeah, it's really interesting. There was a number of things you mentioned there that I certainly relate with. I mean, there was one I remember I asked somebody on my team to put together a sort of history of venture capital for some of our newer employees at one of our offsites. And everyone, including me, was staggered by what a small percentage of the overall financial picture it is for money that is being lended and loaned and invested. It's crazy considering how much press it gets, right? And media exposure. I think the other piece that is interesting is this idea of regulation, either being fast or slow, depending on your point of view. But when we work with corporate partners, there is this incredible desire to be a step ahead of regulation, but not too far ahead of it, right? Like not doing so much that it's a competitive disadvantage because your competitor doesn't need to live up to this, but also not being behind the eight ball when regulation comes in and needing to play catch up. And it's a really interesting dance to watch them, like literally watching like as regulations being written and trying to be one step in front of it.
Yep, absolutely. It's very tricky, and those that go too fast can get themselves in trouble, and certainly those that go too slow can as well.
What do you think? What role do large organizations play when you're thinking about it as a VC? Do you see if let's say a corporate venture capital group comes onto a cap table? Do you see that as a positive or a negative? Would be my first question.
I've seen both. I've seen firsthand both. I've seen corporates transform a company in an extremely positive way through being a large customer and providing credibility, for being an investor and bringing different types of capital into the ecosystem, for helping entrepreneurs kind of navigate the landscape that they know much better. But, I've also seen some challenges. Being a VC is a different skill set than working at a large company. And it requires a greater degree of patience. It requires an emphasis on kind of team building and coaching. And sometimes I've seen strategics struggle there. And then, you do sometimes have divergences of interests where, people want to invest in the next thing because it might disrupt their business. But then they also get a little nervous that this thing might disrupt their business. And in general, I would say what we've seen out of large corporates, though, I think the concerns tend to be very overblown. Yeah. And what they tend to see is they are really interested in having a positive impact. They know this is disrupting their business. There was an era in the mid 2010s when a lot of money pulled out of the clean tech sector. But what kept it alive were utilities, oil and gas companies, et cetera, who said, hey, I know you guys were nervous that there weren't as many huge financial successes in this first wave of clean tech, but it is totally disrupting my business. And I cannot afford to not operate in this space. And so they were the lifeboat that kept this ecosystem alive. And then in the late, kind of 2019, 2020, there's been this new kind of surge of activity in the venture side of this ecosystem, a ton of folks coming out of generalist tech, starting companies in this market. And we've really seen this resurgence. But, I would say the big corporates deserve a tremendous amount of credit for having provided some life support for a few years there.
Yeah, it's very interesting, right? They're less worried about the power law. They're more interested in the strategic insights of what's happening. They want to protect themselves against disruption. They want to figure out how to incorporate it back into their business, and being that large customer is a big piece of this from a founder standpoint. And it's funny, I get asked no matter where I speak, the first question is, well, aren't you worried about the large companies stealing the IP of a startup? And I'm like, the juice isn't worth the squeeze for them. Like, there are definitely like one or two examples over time, but like for the most part, every corporate we work with is like so excited to be at the table and willing to spend what seems like very little money to them, but significant money to the startup to accelerate both of their paths to whatever the thing might be that they're working on.
Totally. And they think about it, they are in the lower risk, lower return game, and startups provide that opportunity for them. And so, but I always joke, the Yellow Pages didn't invent Facebook. They were really well positioned to be able to do it, but that was not where that idea came from.
I love that. That's a good spin on the sort of the big legacy company, right? Not being the disruptor. So let me ask you this: what are you most excited about in this space? There's certainly, like, people always ask me like, what's going on in the VC world, and like, generative AI, without question, the last 18 months, 24 months has been the lion's share of what people are talking about. But right underneath that is clean tech, sustainability, that line, and then there's a lot of question marks after those two. But are there certain technologies or areas of innovation that get you excited, that kind of give you that energy boost of like, hey, this is going to change the world?
Sure. So for us, we invest pretty broadly. So we invest in energy, mobility, food and agriculture. We invest in the built environment, industrial innovation. So we invest pretty broadly across the market. When you think about each of those market segments, they're huge. In all of them, the kind of sustainable alternatives are growing really quickly. And so all of those kind of fundamentals suggest, all right, there's going to be some interesting things that happen here. What we tend to then think about are, as markets grow, they tend to start pretty capital intensive. And as they grow and mature, niches start to open up. And those niches start to look a little bit more like venture plays. So as an example, in the tech industry, the first wave of investment in tech was building the computers, getting them out there. You could not have built Facebook in 1985. But so that first wave was really laying the infrastructure, and then software applications could be built on top of that. And so that second wave has tended to be where you see these interesting opportunities. When I started at the Western Group, the big initial wave of investment was in solar panel manufacturing. If you were excited about solar, the only billion-dollar opportunity that you could invest in was panel manufacturing. Now that the industry has grown, you have multi-billion-dollar companies doing things like being the software that will design the solar panels that will exist on a residential home. That was about a $15 market opportunity 15 years ago, and that's now a multi-billion-dollar opportunity today. So we tend to look for those type of trends that might exist. Within kind of these sectors specifically, the big ones that we're seeing, certainly batteries are changing everything. They're changing the grid. You're seeing the stats now coming out of California in terms of our ability to now generate in excess of what we consume over the course of the day, store energy and use it overnight. That's a huge transformation. People always say the sun doesn't always shine, but if we can store it cheaply, it doesn't really matter. And so a lot of problems are being solved through that. That's obviously transforming the whole transportation ecosystem led by Tesla and now followed by so many others. It's inconceivable that people are going to be buying gasoline-powered cars in 25 years in the United States. It just doesn't make any sense. It's going to be dramatically more expensive. They're going to cease to build those programs because they're going to start to look risky. So that is a huge trend that's going to drive a tremendous number of companies in this market. Again, that first wave was kind of Tesla being a more capital-intensive company, but now you're seeing software companies kind of follow alongside, fintech companies following alongside. Again, you couldn't have built those in 2009, but you now can, and those become really large opportunities. So we try to think about it that way. Maybe we're not always the total tip of the spear. We're not looking for like the first company entering an ecosystem, but it's that kind of second wave that often kind of fits a little bit more in the kind of venture scale or venture style business.
Yeah, I love it. Mike, where can people go to learn more about Earthshot Ventures, learn about you? Where would you like to direct our listeners?
Just check us out on our website. It's earthshot.vc. You can follow us on LinkedIn. We're posting and celebrating the successes of our portfolio companies there all day long. And certainly feel free to reach out to me if you have a great idea or building an awesome business. Would love to be the first call for folks as they build amazing companies.
Awesome. Well, Mike, thank you so much for all you're doing to spark change and for your time today.
Thanks for having me. Appreciate it.